Yes, we're not going to take it anymore, right? Anyway, this is Mr. Not Advice, and it is Saturday, September 13th, 2025. This is my weekend update, and as always, this is for entertainment and educational purposes only. All right, what an interesting week. Sometimes you have those periods in history where a lot of stuff is going on, and some of it turns out to be just a defining moment in that era. So we all know what I'm talking about, and my hope is that wherever you are on the side a political spectrum, that we don't celebrate the death of anybody. So um, anyway, having said that, let's get right into the markets. Taking a look at the Goldman Sachs U.S. equity sentiment indicator, what this shows is that actually, across the board, investors are underinvested. They have a negative sentiment of 0.9%. That's very close to being light positioning. So that's fuel for it's further fuel for what I think is coming, which is a much stronger move to the top side in the market, quite frankly. And this is supported by looking at the uh, investor sentiment. And look, we're at a negative 20. So there is a disconnect um, between investor sentiment and what's going on. This has been reflected. Well, we as a group, and I say we, myself and my team of traders, got long in April, May, and I told them this is one of the most hated rallies, and you're going to have to put up with the mental and emotional abuse of reading garbage out there that says the market's going to crash, blah blah blah. No, um, this is again further fuel right here, negative 20%. I mean, they're going to play catch up, right? So what do we have? We've got professionals who have been getting along the market, and retail has been feeling worse about the market. Classic, classic, right? Retail's always late. And they're going to be late again. So if we look at consolidated, this is actually the overall equity positioning. Actually, I'd like to go back to this chart because there is one little factoid here coming out of this chart. So um, when we've seen a disconnect like this before, where sentiment has fallen to these extreme, the median S&P return over the next three months has been 4%, and over the next 6 months, 8%. Okay, now history rhymes, may not repeat, but again, that's a wind at my back. There is plenty of fuel to run this market higher, and I think they will. In fact, if we look at this, is just the overall positioning for equities. You know, it's modestly overweight at it's like 60, what, 0.49? But we're not, oh, we're at 66 percentile. Okay. We're not even close to being fully invested. So then we take a look at, now this chart is hedge funds, right? So what we're going to look at is the hedge fund, while the market has been going up, what is the hedge fund positioning? Remember, hedge funds were short and just got killed right around here when we were going long. Um, Now they're jumping back in the market. Good. That's what we want to see. But even they're not overextended. I mean, they're not anywhere near being fully positioned. Okay. And then finally, looking at a flows, CTAs. CTAs, commodity trading advisors, are they're long, but even they are not overexposed. They sold off just a little bit this week in terms of their positioning. So we're back down, 92%. This is not a market. I'm not seeing the plumbing of the market, the dollars that move in and out of the market. I am not seeing it where it is deteriorating. In fact, what I see is a future possibility, right, for fuel to gun this market higher. Yes? All right. So if we're taking a look at this chart, um, oh, this is an interesting chart. So this is showing weakening labor markets. All right. So if we look at this bottom line, this is showing uh, effectively the hard jobs numbers. All right. What's actually going? And look at the trend. All right. This is what you see is labor's getting weaker. We expected this. We expected there be layoffs outside of the government, right? Trump's got to thread the needle. It's going to be layoffs while at the same time interest rates come down, which should spur corporate spending and a jobs recovery. I'm not going to say it's going to happen. I'm just saying that's what he's trying to do right now. And then if you combine that with inflation signals that aren't showing any signs of Trump tariffs, right? And this is, look at this. This is inflation, right? The expectations, data surprise, it's going down, not up. And that's why we are seeing these rate cut expectations. Now, I'm a little bit of an outlier. I think we're going to get a 50 basis point cut next week. Now, everyone else thinks, or the market thinks we're going to get 25. I don't know. I think the big challenge or the big unknown is going to be what is the reaction of either? You know, if we get a 50 basis point cut, is the market going to take that as, oh my gosh, we had to cut 50, things must really be bad? Or is it going to take it as, great, it's 50, it's free money, which is the way I take it. Look, anytime there's an interest rate cut, and we've had over 40 globally, okay, it lowers the interest costs for everyone, companies, countries, corporations, uh, individuals, right? So that's more money. If you're paying less money to your debt, credit cards, loans, sovereign debt, that's more money in your pocket and you go spend it. So that's why rate cuts dropping is like a phantom. It's like a quiet quantitative easing. So rate cut odds, yeah, we're going to get a rate cut on this week when Powell makes their decision. I don't know how big that rate cut will be. I think it's 50, right? This is actually from Nomura Securities. Charlie McElliott points out that there are, well, his comment is people were traders were looking for a reason to profit take and did that this week. And then sort of got smashed on Friday. And they probably chased a little bit into the close. Okay. Let's look at our next one here. Ah, yes. So this is looking at the Mag 7 stocks. Obviously, they outperformed for the week, but so did the other 49.3. They were up for the week too. Not bad. Okay, when you get a rate cut, the initial cut in a cycle, because it's obviously they're going to do a cycle here, right? The light blue line, so we're going to say the first rate cut's here. The light blue line is if on average, when the economy continues to grow, on average, 3 months out, they're over 5% higher. 6 months out, ooh, 5%, a little bit less, right? 9 months out, almost 10%, and then 12 months out, 15% higher. Okay. So let's look at just the mean between the economies that grow and the economies that have shrunk post rate cut. So this is historically. The mean even says 3 months out, yeah, you could be down, but it's not even a percent, maybe a percent. Okay. We look 6 months out, positive return +2, 9 months out, +3. So even on a mean, the market is slightly down to up. This is when the economy enters a recession within 12 months. I don't think that's going to happen because I think we've been in a rolling recession. So I don't think this line is valid. But if it is, we're going to see it drop to 10%, the market on average. Hey, if that happens, it happens. I mean, what am I going to do? I will position ahead of time, right? In order to make sure that I reduce risk. But and the final thing I want to look at here is this is where I think there is future alpha. All right. This is CapEx growth estimates looking forward. And this is what the market is freaking out about. The market is saying, hey, this whole rally has been driven by AI. But if the companies start spending less on AI, uh, obviously that's less capital being spent into the system, right? Into the industry. And so I think this is wrong, by the way. I think that what they're doing here, that they have no idea, is my point. They have no idea. They're putting their finger in the wind and seeing which way the wind blows. I believe that this is going to go right back up. Okay. But I'm just trying to show you how people look at the market. It's, we're here and people will look at this chart and say, oh, it's from Goldman Sachs investment research. Well, they must be right. They don't know anything more than you do. Okay. Just because they've got initials after the name doesn't mean shit. All right, let's take a look at some charts. As I always like to do, I'll start off with the S&P 500. Yeah, great week this week, right? We'll pull up the weekly charts first. Great week. We are breaking out to an all-time high in the weekly. Strong, close near the high, 6,600. I suspect that I will look to get long next week, but I can't off of Friday's close, and I'll show you why. We didn't close above Thursday's high. So give me a close above 6,600 and I'll look to get long the S&P 500 via an ETF, a multiple ETF. However, QQQs on the other hand, and they are breaking out on the daily and the weekly. So I will look to get long the QQQ via the TQQQ ETF, which is a 3X ETF. The VIX did absolutely nothing. And it's going to go down and make a new low right here. VIX, there's no fear in the market right now. Okay. Tesla. Tesla is breaking out. Looks like everyone and their brother wanted this level here because it broke it and just kept going. So where do I think we are headed? Well, the next obviously resistance is 400, right? So what do I have to do? I can't get long off of that unless we have a retrace. So I'm going to have to wait for 400 to break on a close, okay? And then I'll be able to look at taking a long trade via TSLL, which is a multiples ETF, right? Looking at the 10-year rate, remember, and everyone's freaking out about, oh my gosh, the Fed's not independent. Interest rates are going to go up because the Fed independence, if the world's not going to want to refi their, that's all bullshit. As we saw through the 10 and they had two auctions this week and they were record demand for 10-year and 3-year debt from the US. Foreign demand, by the way. So 10 years going down lower. I think we're headed below 4%. Easy peasy. On Thinkorswim, you just got to move the decimal over. It's a ridiculous way they quote the 10 years. So we're at 4.06. We're going below 10% or 4%. And remember, that's going to, at some point, people are going to jump in and start buying houses and refining and whatnot. Maybe not refining for the 3.5s, but we're going to get down there. TLT, which is betting on interest rates going down at the long end of the curve. So the 20 and 30 years. If you believe they're going down, you buy TLT because this will go up. I'm waiting for this break. Give me a 90.47 break and I'm in. Okay. I'm in silver still. Clean breakout to the top side. I'm doing nothing. I own it. I rolled it. I have a couple positions that'll look on Monday rolling if there are October calls because I don't want to get chewed up with a theta decay as we go into the last half of September. All right. Open the riot trade. This has been a tricky trade. Okay. We got in on this break and immediately dove the next day. And here's where we finished. Let me get rid of this line. So we closed right here. Okay. So what I'm looking to do is we need to get back above 16 bucks on Monday. And if we can do that, I'll stick with the trade. Right. Otherwise, I'll close it. Roblox. I will wait for a break of this high, 136.35, to enter this trade. Roblox is a phenomenal stock to trade. If anytime this gets near the 50-day, I look to get long. Thank you, my professional trader member, Jeff T. Shout out to you for that. PPTA. Yeah, I mean, I'd like to get long this, but right now it's consolidating and looks like we're going to wedge and maybe even go lower. PCT, I have a lotto trade on this. I have not added yet. I want to see what happens through we break to the top side or downside, but I'd like to get positioned just in case something does get released. NVIDIA, nice gap up here, but I can't do anything until we break 184, right? We're so close. If I get in here at $7, I don't have 4%. I need 4% to my first, what I call speed bump, right? So if you look at this as the speed bump, the next area you're going to hit resistance. Yeah, I don't have 4%. Because if I get 4%, I get a scale. Okay. Marvel, we are in Marvel. We got in on this break. There you go. Right here. We got in the next day. And now we're just consolidating. So I am up in that position. I haven't scaled or anything on it. So I haven't had enough yet. Looking at, I will come back to Ethereum and EOSE. This is Cipher, which we trade on the break. We do not have a scale yet, but this is I have a rule. Whenever a stock hits a 52-week high or a all-time high, then there is the chance for the stock to go 10% higher, and it happens 90% of the time. It happens very quickly. So break 11 this week, and you can see this a monthly candle. We are breaking an area that goes all the way back to October 21. Yes. So really like that trade. I will come back to BMNR also. BAC, Bank of America. I own this. I own leaps in this. I am not adding until we break this 5102. So to give an example, let's go to the monthly. You have to do this. All right, here's the monthly. All right, keep going. There we go. All the way back here before 2008. 5508 is the number we're looking to take out. It's only $5 higher. Yeah. 52-week high. We just made a new one. What's the rule? 90% chance to go 10% higher. Hey, guess what happens when we take out this one? It's a 90% chance to go 10% higher. Let's do the math. From here, plus 10% will be plus 5. That gets me there. Plus another 5.5. That puts me at 61. So these are the little things when you read a chart to have this understanding of what is possible. Okay. It's not bias. These are data points that support your thesis. I also look at data points that don't support my thesis. Okay. Let's see. AU, we got into a gold position finally. There we are. We took this breakout, entered here. We're here. Well, nothing to do. I mean, look, I think gold as an asset, I think gold is headed towards $4,000 by the end of this year. All right, let's take a look at some specifics here. Let's look at Ethereum first of all. All right, I mentioned to my members today, towards the close, I said, I want you to remember a week ago how you felt because we were in the inverse a week ago. We had just gotten, you know, here we go. 1, 2, 3, 4, 5. Here we go. A week ago, we had gone through this and we closed like that. That's depressing, right? But we didn't do a thing. We added. Why do we add? Because of this support here. Could it have broken? Sure. What were the odds that it was going to break? Not greater than the odds it was going to reverse like this. So I think right now Ethereum's at 4,700. I think we're headed even higher. I think next week we will attempt 48, another test. If we get that break, yes, over 5,000, and we could get this type of move in Ethereum right here. This could happen again. That's put you at 8,000. That's how people get there. I don't know. Right? I'm in the driver's seat right now. I own ETHA right here. I own Ethereum. Okay. And then I own BMNR. Let me talk to you about BMNR, right? I will add more at 5581 break. Pretty easy to see. I don't know if that happens Monday, Tuesday, whatever. But I will say this, that the reason I went into BMNR is because there was a structural trade. There was going to be, in my view, very strong institutional demand for a product that that retail doesn't like, by the way. Ethereum is hated by the coin people. And that's their bias, and that's why they're missing out on it. And that's why we got in when very few other people did, because I didn't have that bias because I don't know a lot about digital. So it was just a trading vehicle for me. When we were down here, we actually added a call that we closed last week for profits. Now, if I held an extra day, we made 100%, only made 50% in a week. Why did I do that? Because I wanted to help reduce the risk in this trade. Having closed that now, okay, what I'm looking for is a break of 5581 on BMNR, and we're going to get 60 to 63. We get that, we get my 70. My target on this is just $72. If I hit that, I make 100% on my BMNRs. Okay. And I own 26 and 27s. So I got plenty of time. Plenty of time. This will not go straight up. We will get a pullback. So I'll look to be scaling on the way up, buying on the pullback. Okay. I am from looking. Oh, one of the things I wanted to show you all, if you are in BMNR,
This is an incredible website. He does it free. It's called BM&R Rocks. And when you look at the site, you can actually, it's updated daily. It tells you everything you want to know about BM&R as it's related to its Ethereum holdings, where they are in terms of percentage of Ethereum held, cash, all the things that are important. Here's the one you'll hear a lot about this MNAV. Okay, as BM&R gains, I guess, attraction, this MNAV, right? The multiple to NAV. So what is the price? Okay, trading at relative to the NAV. This was as high as, let's see here. We had an MNAV of 1.6 there and 1.76 there. So we've got, if we were at a 1.76, the stock would be at 68 bucks. Yep. So there is, without any big news, we've already had that type of expansion. But this is a fantastic website that, you know, I use quite a bit, and he does it for free. Great guy. Really great guy. All right, let's take a look at ENVX. Well, ENVX came out this week, and they announced that they were going to do a convertible debt offering. It's somewhat convoluted, as is everything they do, so I'll summarize it. As a shareholder, if you are one, you got screwed again, okay? While ENVX is chirping about the cost of their money being at 4.5%, when you add in the actual cost of doing the call strategy, it's north of 14%. Yeah, it's not cheap money. Here's the other thing they did, and if you've listened to me before, I've mentioned this, okay? If you're an investment bank, the last thing you want to do is try to do a deal for a company that's got multiple classes of stocks and warrants and convertible debt out there. It's messy. So all they have done is bastardize their capital structure, and I don't really understand what they think they accomplished, okay? Because now they have a bunch of cash, which I guess they alluded to they might do an acquisition, which they said would be accretive in 12 months. I don't believe a word out of their mouths. Why would anybody? I don't care if you're like, oh, I just think he's a good guy. I don't give a shit. I would not believe a word out of their mouths. Okay? I'm not saying it's intentional, but they are, the last 3 weeks have not been good for the shareholders, people. So, yeah, I remain short it, and I think now that there is a convertible offering out there, I think the shorts are going to come in and completely short with abandon. Okay? On a side note, I see these posts on Twitter where people are talking about EOSE short position by the minute or ENVX or whatever. Hey guys, guess what? That's useless information. It tells you nothing. Here's why. As a clearing firm, so your clearing firm holds your positions, right? When you sign your new account agreement, you give them the ability to loan out your shares. They can do that for reasons that you can't even understand. Perhaps, this is an example, I'm not saying I've ever done it, they could make a lot of shares available for short to, I don't know, fool retail, watch the number, okay, in order to perhaps put some downward pressure on the stock because they got a buyer to buy the stock, okay? But I see these people posting this shit on a minute basis. Guys, gals, it's useless information. Useless. It is short interest is what yesterday is today's gamma. 6 years ago, no professional trader I ever talked to talked about gamma like they do today. Okay? So my point is, look at the company. Let's get back to ENVX, right? I think the stock's going down lower. I think right off the bat, we're going to go down to $7. That's the next support right here. If we don't hold 7, it's easy. It's going to keep going down. I do not like when people lose money. I hate to see that. And I have been warning for 2 years, and Mr. Reyes has been warning for 2 years that the communication out of the company has not been consistently accurate, nor has it been true. They just flat out lie sometimes. So That is, look, there's 11,000 stocks out there, of which 8,000 are optionable. There are a lot of other cans you can put your money into, right? And in fact, as I posted, the flipping happened with EOSE flipping to the top side as you know, looking at the other side. EOSE had a conference this week. First, they started off by releasing an announcement of software. Software allows the buyer of the batteries to actually manage the flow. I mean, this is incredible. Now they have a completely closed ecosystem. Then they had the conference on Friday. Incredible. Here's my factual takeaways. The gentleman on the stage with him represents one of the largest companies in Europe that also has signed a supply agreement to Amazon for hyperscale power, right? They're a hyperscaler. Um, and he came as close as could. I think what he said is, you know, we're in discussions with the EOSC and want to work with them. I think that we're going to get an order announcement. Maybe not from them this week, but I think we're going to get one. Let's remember last year around fall, and I was the one who said, DOE loan is done, and everyone's freaking out. And I made the comment, if the DOE, when they make that announcement, if they do another announcement, it will pulse the stock. They did 3, and it pulsed the stock. I think they're set up to do the same thing. They had the announcement on Monday. They had the conference on Friday. Let's see what happens on Monday and Tuesday and Wednesday in terms of news. I do expect something. I don't know. Technically speaking, we just took out, okay, a significant high. And if you look at the weekly chart, it's pretty cool. We took out a level that hasn't been breached since December of 2021, 2021. Big time level, okay? What am I doing? Absolutely nothing. I haven't done anything. I haven't sold. It's one of my largest positions along with BMNR and Ethereum. And I remain long. I think this is probably the 3rd inning. I do not believe that my $15 price target is at risk. I think if they can come out, continue. Now, here's what they've done, right? Watch. So they come out with the bad news, you know, no CFO, blah, 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 and it just kills the momentum. Remember this momentum that was building here? Right? And I said that. They killed it. Well, they're building it up again. Let's push this, okay? Because the last time they had a run from here to here, here to where we're at, I mean, this thing likes to run. So where do I think we could go next week? I think without a news announcement, if algos, I think algos are going to be triggered. Algos trigger off of headlines, price changes. This was a big one. Up 13% in a day, over $8, new 52-week high. By the way, when we make a new 52-week high, 90% chance goes 10% higher. So at the very least, I think we're headed to 890 Monday or Tuesday. Now, what we need is some help. The Russell 2000, the small cap market on Friday, was red. Now, that was merely a retrace against Thursday's action. I expect this to bounce. Okay? EOSE was strong on Friday with the Russell weakening into the close. So if we get a Russell that's strong, we're also going to get algorithmic buying into EOSE, which how we get the $9 to $10. I think we get 9 next week no matter what. If you didn't have a chance, I had a live session on Friday that was just a ton of fun. And what I did is I called out the price, and I set a price that I wanted to scale at, and I got it in the last 20 seconds. It was beautiful. Just beautiful. But what I was showing is people how to read this chart on a 1 minute and making the point that the way I do it on shorter time frames is exactly the same way I do it on longer time frames. So if we look at, I guess in summary, in the overall market, I believe the market's going up. I've believed it's continued to go up without any black swan event. Black swan would be a term that was coined by or made popular by Nouriel Roubini, and it represents an event that's an outlier, not expected. Black swans aren't expected. However, what he found out is that black swans happen with a lot more occurrence than the human mind would like to admit. Why? Because we like order, and black swans are things that we cannot predict, and therefore we just pretend that they don't happen all the time. They do. They happen a lot. Okay? You ever hear of, this is a 200-year-old flood? Yeah, it happens like, what, every 5 years, a 200-year-old, flood. So I think the overall market's going higher. My members and I are just super excited because a week ago our portfolios were a little bit worse off. But we follow the charts, we follow the price levels as I teach. Oh, I did want to share that. One of the things that I've started is something called a Century Club. And I had 4 members this week, 3 of which are paid and 3 of which are not paid. Okay. I had 4 members this week that hit the Century Club. What's the Century Club? It's when their portfolio goes up 100% since they've joined. Okay. So it's just incredible. A couple of these guys, it's right at a year point. I usually say to people, hey, in the first year, I think you can hit between 50 and 100%. Now, that's risking, on average, maybe 40, 45% of their portfolio. The rest of it's in cash, with our average trades being like 14 days long. So we're not in the market all the time. So I am not trying to sell my program. I am telling you that if you want to learn, at least check out the Discord, because I've got free members in there, as you can see, that are also up 100%. So this is in addition to my other members who have retired. I would encourage you, if you have questions, to please email them to me at theboss@mrnotadvice.com. Also, I have my brand new website being released this week. Yes, finally going to move up from the 1990s version that I did, and I actually hired a professional, and they have done a wonderful job. So we're going to launch that this week. And for my Fight Club members, I launched new tools, which I'm going to do a demo video on, because effectively what my paid members have is a scanner that scans the entire market for my setups, scores them, and then constructs the trade for you. I don't know how it gets any easier than that. So finally, everyone was very moved with what happened this week. And I guess my only prayer and hope is irregardless of where you fall in the political spectrum, and as a Philly guy, this is tough to say, let's be kind to one another. Yeah. So, hey, have a safe, blessed weekend. Enjoy your family, your friends, your pets. And I'm looking forward to next week. I think we may have started our little Christmas celebration early, my team and I, meaning that we may have some pretty good gains over the next 2 weeks, since our 2 largest positions look like they are wanting to start to run. But ultimately, one final thing. With EOSE, I do expect on Monday some level of a retesting or a pullback because of this candle. Look at this. It's a big candle, right? So usually what we do is we get a 50% retrace. Yeah? So this could come back down to 776, 750 intraday, right? I'm not going to be a seller. I believe, and I think the momentum's there to get this thing above 10 in the next month, and then over 15, up to 15 by the end of the year. So, hey, have an awesome weekend, and I'll see you in the room next week.